The business desk, local consumer confidence is starting to look up according to the latest F&B BR study. The fourth quarter consumer confidence index reveals that sentiment has rebounded to -9 index points. This marks the highest reading for the year, with improvements in all three sub-indices. Confidence levels among middle-income households earning 5 to 20,000 rand a month also improved from -16 to -8 points. The outcomes have been attributed to lower interest rates and a stronger rand exchange rate that made durable goods more affordable. Retail sales volumes over this festive season are further projected to exceed 2024 holiday period numbers. We speak to F&B senior economist Siphamandla Mkhwanazi about these outcomes. Thank you so much for your time, Siphamandla. Let's first talk about whether this is what the market had expected.
Good evening, Dumisani. Good evening to your viewers. The outcome was actually better than what the market had anticipated. The market had anticipated that sentiment was going to remain relatively stable, and the outcome was slightly better than that. And I think there is also some positivity going into the next quarter as well, given the fact that the survey was conducted from the 10th to the 21st of November. So the latest interest rate cut hardly made any influence into how consumers were feeling into the fourth quarter of this year. So maybe that positivity will also roll over into the first quarter of next year.
Let's speak further about that positive near-term outlook, particularly looking at the festive season. What is expected in that period? Because we do know that consumers with a little bit more to spend, we get into what's known as silly season.
Yeah, of course. We have started to see those green shoots coming through from retail sales perspective, where consumers were slowly shifting away, not necessarily shifting away, but engaging more and more with your non-essential items, so your household furniture, your hardware, material, and all of those things that generally tend to be sensitive to interest rate changes. So lower interest rate have supported that trend. We have also seen the strength, as you mentioned in your introduction, the strength in the rand, making those imports cheaper. But the third and the most important point here is that we are in an environment where the global factor, which is China, is diverting goods away from the big markets such as the US to other new markets, including South Africa. So we have seen those consignments from China, particularly of furniture, household appliances, and all of these electronics becoming bigger and bigger, as well as cheaper and cheaper. So the combination of those three, lower interest rates, the fact that the rand is stronger, which naturally makes imports cheaper, and the fact that China is exporting this deflation. So all of that is improving affordability, and we are starting to see those volumes responding to those positive factors.
Having mentioned that, so what more could be a possibility around tipping the scale in terms of a trajectory of consumer confidence? We've also seen the likes of business confidence improving, but outside of the global dynamics and landscape, we know that local developments could also be a game changer.
Of course. So what was interesting with the latest outcome is that the consumer that you would expect that will react to these positive developments that have taken shape in the last couple of months, being the upgrade from S&P, the removal from the grey list, stronger rand, all of those factors, lower interest, all of those factors naturally would lift the sentiment of your higher income households. But what we saw this time around is that, in fact, their sentiment, went in the opposite direction. It's quite difficult to understand why that would have been the case. However, given the fact that we have now seen, a positive budget, interest rate cut on the 20th of November, when the survey period ended on the 21st of November, we think that probably those developments will be reflected in the first quarter of next year. Overall, however, sentiment is closely linked to how the labor market is doing. We saw in the previous quarter that we netted around about 248,000 new employment. Should that trend of adding new employment continue, we could see business confidence picking up even further into the new year.